Welcome back. While this week marks exactly 1 month since Russia invaded Ukraine, causing volatility and weakness on global stock markets, much attention has been focused on how rising food and gas prices will leave us out of pocket. So more importantly, how will this ongoing conflict impact your investment portfolio? So to unpack what it all means for our financial plans, portfolio manager at Momentum Securities, Serfaas Badenhorst, joins us now via Zoom. Serfaas, thank you so much for your time this morning. I think the most important question really is, how is my money and my investment going to be affected by all that is happening between Russia and the Ukraine? Just take us through exactly what kind of volatility are we looking at that could potentially hamper even what we've saved up so far?
Well, as you mentioned, I think the war is definitely adding to volatility and to further pressure on the stock market. And it's clear that there's definite winners and definite losers. So I think for the structuring of your portfolio, you need to make sure that you have some winners in there and there's some buying opportunities that's arising at these levels.
Yeah, I mean, we're speaking here about being able to have some buying opportunity. I've always been taught, and we always say, that we need to have a little bit of investment and a lot of and some liquidity as well. Make sure there's always cash in hand and make sure that there's always some kind of assets stored up. But talk to us a little bit about that ratio as we go into literally uncertain waters because of what's been happening in the Ukraine as well as Russia.
Well, I think it's important not to jump to any conclusions. I think we must know that events like this in the past have obviously affected portfolio returns. So it's very important to stay invested in quality stocks that you have. Make use of some opportunities that's arising at this level, but don't be too speculative in your approach. Just make sure that the companies that you do hold on to are good quality, and you'll be fine.
You know, subsequent to that, we've also got to deal with the energy crisis, right? And as well as the volatility in that. I mean, we're feeling the pinch here in terms of just how much we're paying for petrol, right? But this has certainly done a lot in terms of being able to help us restructure, you know, our current investments and our current pockets, simply because we do not understand how much time will still be allocated to this invasion of the Ukraine by Russia. But if we have to look at the energy or the potential energy crisis that we could be facing as a result of that and how it will hamper us directly, what would you say to that?
No, well, I think, as you mentioned, it affects us most in the energy sector. I think Russia is the third largest producer of oil and gas in the world. So obviously that will have an effect on the prices and the supply side of it. And I think the South Africans are feeling the pinch, especially in regards to a higher oil price, which is leading to higher petrol prices. So I think that's the biggest effect, obviously the knock-on effect on the consumer for higher transportation cost of food. So definitely being felt in the pockets of the normal South African.
Yeah. How bad would the inflation be in terms of just the stock market in general? And are we facing, literally, are we on the loom, on the brink of that inflation? I don't want to call it an inflation crisis, but it's almost like an inflation overload at this moment in time.
Well, I think even before the Russian war, the world was on an inflation fear cycle already. So, I mean, if you look at the United States of America, their inflation is already at over 7%, which is unheard of. So this is just going to add more pressure to inflation. And I think this week, although it's very bad news for the consumer, the Reserve Bank is trying its best to actually contain the inflation by hitting up the interest rate.
Yeah, Serfaas, just from an investment perspective, what would be a good response to the volatility and what would be a bad response to the volatility?
I think a bad response would be to sell out completely and to make unjust movements in your portfolio. I think you must remember that if you're invested, it's a long-term investment and there will be volatility in your portfolio. Hold on to quality. And as you mentioned, if you have liquidity or some dry powder, utilize some of that in some buying opportunities that you have now to buy in at lower levels and to keep it for the value, because the value will maybe only be unlocked in a year or 2 years' time, but at least you remain steady.
Serfaas, we'll have to leave it there, unfortunately. But thank you very much for your insights and your time. All that looking at exactly how is it that you can make better decisions when it comes to your investments. Serfaas Badenhorst giving us the latest insights on that one.